Forex trading has become one of the most popular ways to make money online, but many beginners struggle to understand how it works. The foreign exchange market moves trillions of dollars every day, creating endless opportunities for those who know what they are doing. However, without the right knowledge and strategy, trading Forex can be risky. The good news is that anyone can learn how to trade successfully with the right approach. In this video, we will guide you through the essential steps to mastering Forex trading. By the end, you will have a clear roadmap to start your journey with confidence. Stick around until the end for expert tips on how to avoid the most common mistakes. Do not forget to like, subscribe, and turn on notifications so you never miss a valuable lesson. 1. Understand the basics. Forex trading, or foreign exchange trading, involves buying and selling currency pairs to profit from price fluctuations. It is the largest financial market in the world, with over $6 trillion traded daily. Unlike stock markets, Forex operates 24 hours a day, 5 days a week. The goal is to buy a currency when its value is low and sell it when it rises. Commonly traded pairs include EUR, USD, GBP, USD, and USD, JPY. Before diving in, it is essential to learn basic Forex terminology. Terms like pips, lots, leverage, spreads, and margin play a crucial role in trading. Pips measure price movement, while leverage allows traders to control larger positions with smaller capital. Understanding these concepts helps traders make informed decisions and manage risks effectively. 2. Learn how the Forex market works. The Forex market is decentralized, meaning it has no central exchange. Instead, it operates through a global network of banks, financial institutions, and brokers. There are 3 main trading sessions: the Asian, European, and North American sessions. The market is most active when these sessions overlap, creating high liquidity and volatility. Currency prices are influenced by supply and demand, global events, economic reports, and central bank policies. Major news such as interest rate changes, GDP reports, and inflation data can cause sudden price movements. Traders use these factors to anticipate market trends and make better trading decisions. Understanding market hours and economic influences helps traders choose the best times to enter and exit trades. 3. Choose a reliable broker. To start trading, you need to open an account with a Forex broker. A broker acts as an intermediary, executing trades on your behalf. Choosing a reputable broker is crucial for a safe and smooth trading experience. Look for brokers regulated by financial authorities like the US CFTC, UK FCA, or ASIC in Australia. A good broker should offer competitive spreads, low fees, fast execution speeds, and a user-friendly platform. Most brokers provide platforms like MetaTrader 4, MT4, MetaTrader 5, MT5, or CTrader, which come with advanced trading tools. Before committing real money, test the broker's services with a demo account. A demo account allows you to practice trading with virtual funds, helping you understand the market without any financial risk. 4. Learn technical and fundamental analysis. Forex traders use 2 main types of analysis: technical analysis and fundamental analysis. Technical analysis involves studying price charts, patterns, and indicators to predict future price movements. Traders use tools like moving averages, trend lines, and the relative strength index, RSI, to identify entry and exit points. Fundamental analysis focuses on economic news, interest rates, inflation, and geopolitical events that impact currency values. Reports like GDP growth, employment rates, and central bank decisions influence Forex prices. Combining both types of analysis improves trading accuracy and helps traders develop a well-rounded strategy. 5. Develop a trading strategy. A successful trader follows a structured trading plan. A trading strategy defines when to enter and exit trades, how much risk to take, and which currency pairs to trade. Common trading strategies include scalping, day trading, swing trading, and position trading. Scalping involves making quick trades for small profits, while swing trading focuses on capturing longer-term price movements. Risk management is a crucial part of any strategy. Using stop-loss and take-profit levels helps traders protect their capital and minimize losses. A common rule is to risk no more than 1–2% of your trading account per trade. Consistency and discipline in following a strategy improve long-term profitability. 6. Open a demo account and practice before trading with real money. Practice with a demo account. A demo account allows you to trade in real market conditions using virtual funds. It helps you test different strategies, understand price movements, and get familiar with the trading platform. Many brokers offer free demo accounts with access to live market data. Practicing in a risk-free environment builds confidence and helps traders avoid costly mistakes. It also allows traders to refine their strategies and improve decision-making skills. Once you consistently make profits in a demo account, you can transition to live trading with a small amount of real money. 7. Keep learning and stay updated. Forex trading is constantly evolving, so continuous learning is essential. Follow financial news, read Forex trading books, and take online courses to expand your knowledge. Many websites, such as Investopedia and BabyPips, offer free educational resources for beginners. Joining trading communities and forums can also provide valuable insights. Experienced traders often share strategies, market analysis, and trading tips. Watching live trading sessions and webinars can help you understand different trading styles and techniques. The more you learn, the better your chances of success. 8. Start trading with a small amount. Once you are confident in your knowledge and skills, start trading with a small amount of real money. Avoid using high leverage, as it increases both profits and losses. Begin with a micro or mini account to minimize risk while gaining real trading experience. Keep track of your trades by maintaining a trading journal. A journal helps you analyze past trades, identify mistakes, and improve your strategy over time. Evaluating performance regularly helps traders adjust their approach and become more consistent. 9. Manage your emotions and stay disciplined. Successful Forex trading requires patience, discipline, and emotional control. Many traders lose money because they let fear and greed dictate their decisions. Avoid overtrading, chasing losses, or making impulsive trades. Sticking to your strategy and risk management plan is crucial for long-term success. Losses are a part of trading, and learning to accept them without frustration is important. Professional traders focus on long-term profitability rather than short-term wins. Maintaining a strong mindset and following a structured approach improves trading performance. 10. Scale up and grow your trading account. Once you gain experience and develop a profitable strategy, you can gradually increase your trading capital. Scaling up involves increasing position sizes and diversifying trading opportunities. Avoid making sudden changes to your strategy, and always test new techniques with small trades first. Consistency and continuous learning are key to long-term success. Forex trading is not a get-rich-quick scheme, but with the right knowledge, practice, and discipline, it can become a profitable skill. Keep improving your skills, stay updated on market trends, and refine your strategies to achieve long-term growth. Forex trading can be a powerful way to build wealth, but success does not happen overnight. By understanding the market, developing a solid strategy, and practicing disciplined trading, you can increase your chances of making consistent profits. Remember, patience and continuous learning are the keys to long-term success. If you found this guide helpful, be sure to like this video, subscribe to the channel, and turn on notifications for more valuable trading tips. What part of Forex trading do you find most challenging? Let us know in the comments below. Thanks for watching, and we will see you in the next video.